Hello everybody, it's Dylan Milks here for Sunday, April the 3rd, 2011. I'm glad to be back. Had to get a new webcam, or the one I had bought earlier this year was faulty, so I'm glad to be back online and back recording some videos, and hopefully the quality of these ones will be much better and sharper than the previous ones were. In any case, so I was here to talk today about some of the economic events of March and some of the things to look forward to in April and some of the things that are coming up for the month of April. So for the month of March, we had another very strong month for silver. Silver was up $3.50 for the month of March. Basically, that's about 10% for the month of March alone. So now for the year, for the first 3 months of 2011, silver has risen about 24% in 3 months. So that's been very, very exciting, and I'm very excited about silver and about where it's going and the potential that it has over the next decade as some of these economic changes continue to unfold and are rolled out. So it's very exciting so far what it's done this year. So again, 24% gain so far in the first 3 months of 2011. So I think we're on pace, I think, to certainly to come close to 2010's gains of 80%, if not even possibly even surpass that this year. But gold is another story. Gold has been certainly been stuck a bit. It gained about 1% in March. It's up about 4% for the year so far. Gold seems to be stuck around the 1450 mark, seems to have a hard time getting through that barrier, and seems to be kind of going between the channel of 1420 or so and 1450, and has been having some problems getting past the 1450 mark. But from the macro picture, from the long-term picture, lots of great potential there for both gold and silver. More so silver, simply because it's undervalued compared to the historical ratios of gold to silver. Now, for the month of April 2011, there's a few things that I just wanted to point out and that we need to be watching for that will have an effect on the economy at large, but specifically gold and silver prices. The first thing is Portugal. Now, of course, in 2010, we had the European Union bailed out Greece, and then towards the end of the year, bailed out Ireland. Now it's looking like probably within the next 2 weeks or so, Portugal is going to be getting a bailout from the European Union, but it's not really the European Union. It's basically will be the German taxpayers with a little bit of the French taxpayers' money. So this is going to have an effect again on gold and silver prices. It'll have a positive effect, and so this is something to watch for in the first couple weeks of April, as it's rumored that this is when the European Union will be announcing their bailout plan for Portugal. The second thing to watch out for the month of April is the U.S. debt ceiling. Now, sometime it should be about the last week of April or the first week of May, the U.S. federal government is scheduled to hit their debt ceiling. So what this means is that the government cannot borrow any more money once they hit the debt limit. Now, unfortunately, really the debate on the debt ceiling amongst the American politicians has really been put on the back burner, really due to the situation in Libya and really the overall the Middle East situation and the problems going on there, and of course with the situation in Japan as well, which is unfortunate that there's been issues that have been larger than this that overshadowed it, because I do believe that this is a huge issue. Because essentially, if the U.S. government cannot borrow any more money, they're either going to have to do a couple things can happen. One, they're going to have to default on some of their interest payments. Two, they're going to have to make some serious spending cuts. Or the third thing that could happen is that President Obama could make another executive order, basically just saying, look, we're not even going to have a debate about this. We're just going to raise the debt limit, the debt ceiling by another couple $1 trillion, which basically would be the same situation which he did with Libya, where he basically did not consult the American people, go through the proper channels to conduct the war. So it'll be interesting to watch. Again, this should be happening last week of April or the first week of May. So that's the second issue that I'll be watching for in April. And again, depending on what that happens and what the result of that is, that's just going to have another positive effect on the prices of gold and silver. The third situation, the third thing to watch for in April is the Federal Reserve, the U.S. Federal Reserve's announcement, which is coming on April the 27th. Now, every 6 weeks, the U.S. Federal Reserve announces its policies regarding its interest rates. Now, the interest rates have been basically at zero for about close to a year now. They've been between 0 and 1/4%. Now, here's the one issue that really could have a temporary effect on the price of gold and silver, because with all the inflation that is happening in food prices and the rumored inflation that is coming, I just read an article in Canadian Business Magazine about the fact that food prices rose quite substantially even in Canada here in 2010. They're expecting somewhere between 7 and 8% rise in food prices in 2011, and that same level continuing on for the next 3 to 5 years, which is quite substantial once you compound that. When you look at that over a 5-year period, if we're going to be experiencing anywhere from a 5 to 8% food price increase, compound that, that's a pretty massive hit on our wallets. And so for this reason, there are some who are rumoring that there are some rumors that the Federal Reserve will raise their interest rates to start combating some of this inflation that they see as coming, which already has taken place now. So if that happens, now that will have a temporary effect on gold and silver. Probably will be the catalyst for a pullback, which we're still waiting for. I mean, 2010 silver was up 80%. So far in the first 3 months of 2011, it's been up about 24%. So these kind of numbers really are not sustainable, of course, and as many of the experts have been forecasting a pullback, probably about a 10 to 15% pullback. So if the U.S. Federal Reserve announces and takes action and does in fact raise interest rates, I believe that will have a short-term effect on the price of gold and silver, and they will have a pullback, somewhat of a pullback because of that. But then again, that has to be counteracted, and with the situation in Europe, with Portugal needing a bailout, as well as the U.S. Hitting their debt ceiling limit at the end of the month as well. So the other thing that may happen too is that the Federal Reserve may simply just announce that they have a plan to raise interest rates at some point before the end of the year. That's the other thing that could happen, is that they could say that. Now, if that happens, again, that too, even though they don't raise interest rates immediately, just the fact that they're announcing that they will raise it at some point this year will probably have an effect on the price, again, on the short-term basis as well. The third thing that may happen out of that announcement is Ben Bernanke. He's the chairman of the Federal Reserve. His views really differ from a lot of the other members, voting members on the committee there. His view has been that that the Federal Reserve buying the banks' bonds and basically essentially buying their debt, to clearing off their balance sheet so that they can lend more money, out freely, which this was referred to as quantitative easing. That this basically, Ben Bernanke is really in favor of doing more of this. And now, if that plays out and that happens, then that's going to have I believe, a significant impact on gold and silver on the positive side, which could actually be three positive factors for gold and silver. Otherwise, there would be 2 positive factors for gold and silver: the Portugal situation, the situation with the U.S. debt ceiling, and then 1 negative, which would be the possible rise in interest rates. So thanks everybody for watching, and I'm glad to be back online, and have a great week, and we'll talk to you soon, probably at the end of the week. So take care. Have a good week. Bye-bye.